Think the Florida housing market is still booming? It's not. Behind the sunny Instagram photos and retirement fantasies, a real correction is taking place. Home values are slipping, insurance costs keep climbing, statewide inventory is up 25% compared to last year, and houses are sitting on the market for about 74 days. This isn't a brief slowdown. It's a genuine reset that's reshaping real estate across the state. Is your area on the list? And what does it mean for you? Here are the 10 Florida markets getting hit the hardest by the 2025 housing correction. Number 10, Deltona. Daytona has NASCAR, spring break, and those Atlantic views. But the tourism gloss doesn't show what's happening in Deltona's housing market. It's showing real signs of strain this year. Home values slipped 2.2%, bringing the median price to $352,000. That might not look dramatic, but it's only part of the story. The number of homes for sale jumped 31%, with more than 3,200 listings. That's almost double the inventory from early 2023. And they're taking longer to sell. Homes that moved in about 6 weeks 2 years ago now sit for more than 2 months. Insurance costs are also putting pressure on buyers. Depending on the part of Volusia County, annual premiums range from $4,500 to $6,800. Retirees on fixed incomes weren't expecting bills like that. The buyer pool has thinned out too. The rush of remote workers, snowbirds, and early retirees from 2022 and 2023 has faded. Companies want people back in the office, the economy feels shaky, and owning a Daytona area home doesn't feel as essential anymore. Some who bought near the peak are already trying to sell, even at a loss. Nearly 20% of sellers in spring 2025 cut their asking prices. Daytona isn't collapsing, but the boom is over. Number 9. Gainesville, home of the Gators and a place that usually has a steady market. Gainesville isn't escaping this correction. Prices dipped 1.4% over the past year to a median of $349,400, and inventory increased 28%, moving from about 1,400 listings to nearly 1,800. That's a big shift for a smaller city. Developers overbuilt during the pandemic when they expected demand to keep rising. New subdivisions, condos, and apartment complexes popped up in areas like Alachua and Newberry, but the buyers never came. Some streets now have for sale signs on every third house. Local incomes haven't kept pace either. The typical household earns about $48,000, while the median home price is more than 7 times that, far above the recommended 3 to 4 times ratio. Insurance is the one bright spot. Gainesville has the lowest average homeowner premiums in Florida at about $2,558 a year, less than half the state average. Still, job growth has slowed, wages are stagnant, and the university isn't expanding fast enough to support all the new housing. Outside of education and healthcare, there aren't many high-paying jobs. Gainesville remains a pleasant college town, but the market is clearly strained. Number 8. Tampa, St. Petersburg, Clearwater, Tampa Bay was once the symbol of Florida's real estate boom, but 2025 paints a different picture. Listings nearly doubled from under 3,000 in early 2023 to more than 5,400 today, an 80% jump. Developers built aggressively, expecting endless demand. Condos, high-rises, and sprawling subdivisions multiplied fast. But higher mortgage rates changed everything. With rates around 7%, a home that once cost $1,900 a month in 2022 now costs about $2,700. Median prices dipped 1.3% to $400,000, and analysts say there's a strong chance they'll fall further. Investors are rushing to unload homes, some at 5 to 10% below their purchase price. Property taxes and insurance have risen over 45% since 2022. Insurance on homes near the bay that once cost under $3,000 now runs about $1,500. Waterfront homes often pay between $8,000 and $10,000 or more. Hurricanes Idalia and Milton didn't just damage homes. They hit the insurance industry so hard that several companies left the state. Homes now sit on the market an average of 46 days. Compared to 18 days in 2022, and 1 in 4 listings has a price cut. Sellers are offering incentives like closing cost assistance and free appliances. Tampa was once seen as a safe market, but it's now facing a harsh correction. Number 7. Fort Lauderdale. Fort Lauderdale was long marketed as the Venice of America, with its canals, yachts, and luxury waterfront lifestyle. But in 2025, the shine is wearing off. Inventory climbed 27% in a year, with nearly 20,000 homes now on the market. Properties that once drew multiple offers in a single weekend are sitting for months. A home that would have sold for $650,000 2 years ago now struggles to bring in $580,000. Ownership costs are a big reason why. Being right on the coast means steep insurance premiums. Waterfront homeowners are paying $8,000 to $12,000 a year. Even homes a bit inland see bills between $6,500 and $85. Add HOA fees of $600 or more in many newer buildings, and monthly housing costs are pushing buyers away. Investors are also retreating. During the boom, they snapped up condos non-stop, but now about a third of those units are listed for less than the purchase price. Short-term rentals are struggling as well. Tourism in South Florida is down nearly 10%, and Airbnb occupancy fell 15% since 2023. Mortgage rates around 7%, combined with falling rental income, have caused many hosts to give up. Fort Lauderdale still looks beautiful online, but the market is under real pressure. Number 6. Jacksonville. Jacksonville, Florida's largest city by land area, had strong appeal thanks to its job growth and affordability. But the market has cooled sharply. Inventory is at its highest level in a decade, with nearly 4,000 homes for sale, about double the number from early 2023. Builders put up subdivisions quickly in areas like Orange Park and Middleburg, but rising interest rates reduced demand. A $300,000 home effectively feels like a $450,000 one once financing costs are factored in. Fitch Ratings says Jacksonville homes are about 26% overvalued based on historical norms and incomes. Median prices stayed around $390,000. That may seem stable, but flat prices during inflation translate to a real decline. The local economy is also slowing. Jacksport saw freight volumes drop 14% year over year, which means fewer jobs in logistics and warehousing. Lower incomes mean fewer buyers. Insurance premiums have climbed too, up 60% in flood-prone areas. Some families are relocating to smaller inland towns for cheaper living costs. Institutional investors who bought heavily in recent years are also selling. About 1 in 5 listings is investor-owned, and many are priced to move. Homes are sitting about twice as long as they did in 2022. Jacksonville still has a lot going for it, but the market is clearly in reset mode. Number 5. Lakeland Winter Haven. Located between Orlando and Tampa, Lakeland Winter Haven seemed like a great buy during the boom. Prices were reasonable and the population was growing, but the area is now considered one of Florida's highest-risk markets for continued declines. Prices have already dropped 2.5%. falling from $333,300 to $325,000 in a year. Inventory exploded from 3,000 to 4,800 listings, a 60% increase in a metro of only about 270,000 people. Builders put up too many homes in areas like South Lakeland and North Polk County between 2021 and 2023, expecting growth that didn't materialize. Mortgage rates near 7% killed affordability, leaving many newly built homes sitting unsold. Investors own about 31% of current listings, and many are slashing prices. Homes listed for $430,000 in 2023 are now priced around $360,000 and still move slowly. Insurance costs rose about 40%, with premiums now between $4,500 and $6,000. This isn't coastal real estate, but the increase is enough to hurt buyers. The economy is feeling the slowdown as well. Lakeland depends heavily on logistics and distribution, but freight volumes nationwide are down, reducing hiring. Homes are taking about 53 days to sell, more than twice the speed during the boom, and many need to be relisted below appraisal value. Lakeland enjoyed a surge of popularity in recent years, but the correction is hitting hard. Number 4. Cape Coral, Fort Myers. This area saw one of the sharpest drops in Florida. Prices fell 9.6% in a single year, from over $410,000 to around $375,000. Just a couple years earlier, prices had climbed more than 65%, a surge that fast almost guarantees a painful correction. Inventory more than doubled, from about 3,200 listings in 2023 to more than 5,000 today. Homes now sit on the market for more than 60 days, twice as long as during the peak. Hurricane Ian in 2022 played a huge role. Beyond the physical destruction, it wrecked the insurance landscape. Homeowner premiums jumped to between $9,000 and $11,000 a year, even in areas that weren't heavily damaged. Coastal properties often pay $13,000 to $15,000. Some insurers simply left Florida, making coverage hard to obtain at any price. Investors and snowbirds, who drove much of the earlier growth, have stepped back. Economic uncertainty, high insurance, and rising rates pushed them out of the market. Tourism is weaker too, dragging down vacation rental income. Many Airbnb owners are selling at steep discounts. Local incomes remain low, under $60,000 a year, so even after a big price drop, homes are still out of reach for many buyers. Overbuilding has added to the problem. Entire neighborhoods were developed quickly, and some homeowners are facing utility hookup fees exceeding $30,000. It's a classic boom and bust scenario. Number 3. Northport, Sarasota, Bradenton. Sarasota has long been synonymous with upscale coastal living. But in 2025, the luxury market is struggling. Prices dropped 9.9% in a year, and inventory has soared. There are now more than 3,700 homes for sale, up from about 1,800 2 years ago. Higher-end homes that once brought in $1.2 million often struggle to reach $975,000. Some luxury properties have fallen 20%. The median price sits around $475,000. The decline started because Sarasota became far too expensive, with Zillow marking it as 38% overvalued in 2022. Higher mortgage rates pushed luxury buyers to the sidelines. The market relies heavily on wealthy retirees and second home buyers, but stock market swings, inflation, and broader economic uncertainty made them more cautious. Insurance is a major burden here. Waterfront homes in Sarasota, Bradenton, Longboat Key, and Siesta Key often face premiums between $8,000 and $12,000. Premium coverage for high-end properties can hit $18,000 or more annually. Days on market tripled, from about 32 days in 2022 to 91 days in 2025. About 40% of listings reduced their prices this spring, sometimes by $50,000 to $100,000. Some multi-million-dollar homes have been cut by hundreds of thousands and still aren't moving. Northport, the more affordable area, is overwhelmed with supply. Rapid suburban development created far more houses than buyers. Sarasota remains beautiful, but the housing market is hurting badly, and analysts expect more declines. Number 2. Port St. Lucie. Port St. Lucie is among Florida's most misaligned markets right now. Florida Atlantic University found that homes here are priced about 41% above where they should be based on long-term trends and local incomes. That's not a mild overvaluation, it's a major imbalance. The median home costs $420,000, while the typical household earns about $62,000. That price-to-income ratio is almost 7 times, well above the healthy range of 3 to 4. Inventory is up 35% as builders keep finishing homes that many residents can't afford. The surge of out-of-state buyers from places like New York and New Jersey has slowed due to economic uncertainty and rising costs. With that pipeline drying up, builders are cutting prices sharply. Some new communities have dropped prices from $430,000 to $360,000. Sellers are offering incentives like $15,000 in closing costs, new appliances, interest rate buy-downs, and even covering a full year of HOA fees. These types of incentives show how out-of-sync list prices are with demand. Rapid population growth also pushed the city's infrastructure beyond its limits. Schools are operating at about 115% capacity. Traffic on US 1 is routinely jammed. Water and sewer services are strained. Insurance costs are another challenge. Waterfront homes often see premiums between $7,500 and $9,000, while inland properties pay $5,000 to $6,500. Combined with high mortgage rates, the monthly payment is becoming unmanageable. Prices have slipped 1.2 to 2% so far, but analysts believe the market has farther to fall. Number 1. Naples, Immokalee, Marco Island. This is the hardest hit market in Florida. Naples saw a 15.8% drop in home prices over 1 year. The median fell from more than $670,000 in 2023 to about $565,000 by mid-2025. Some luxury waterfront homes are down 20 to 25%. Inventory is extremely high, with nearly 7,932 active listings, up nearly 29% from the previous year. Roughly 34% of all listings have already cut prices. Home values skyrocketed during the pandemic. Prices in Naples surged more than 70% from 2020 to 2022, driven by heavy speculation. Luxury condos that once sold for $800,000 were going for $1.4 million by 2023. Now that the speculative demand has faded, the market is resetting. Wealthy buyers who once snapped up second and third homes have stepped away. Uncertain financial markets have encouraged them to wait for better deals. Insurance costs in Collier County are extremely high. Waterfront estates often pay $15,000 to $25,000 annually, and high-end homes above $5 million may pay $40,000 to $50,000. New supply is also a factor. Condo projects that started during the boom are now hitting the market at the worst possible time. Developers are offering striking incentives, including months of covered HOA fees, huge closing credits, fully furnished units, and even luxury cars. New condo regulations passed after the Surfside collapse also created financial strain. Buildings now require more frequent inspections and properly funded reserves. Older complexes have issued special assessments ranging from $50,000 to more than $100,000 per unit. Many owners are selling to avoid these costs, adding even more supply. The mood has shifted dramatically. Homes that once sparked bidding wars now sit for months. Sellers still cling to 2023 price expectations, causing a standoff that could last into 2026. With more than 8,000 homes on the market and thousands of price cuts, the correction here is deep. Naples remains visually stunning, but its housing market is in one of the steepest declines anywhere in the country. From Naples' nearly 16% drop to Daytona's smaller 2.2% decline, the message is clear. The boom is over. These markets share the same core problems. Prices rose far beyond what local incomes could support. Insurance has made homeownership far more expensive. Overbuilding created too much supply. Investors are excited now that the math no longer works, and price-to-income ratios stretched way past healthy levels. But it's important to keep perspective. This is a correction, not another 2008-level collapse. Most markets are seeing modest declines of 1% to 3%. It's tough on recent buyers, but it's not a total meltdown. The market is settling down after an unsustainable surge. If you're looking to buy, 2025 could give you an advantage with motivated sellers and more inventory. If you're selling, be realistic. Price your home competitively, be ready to negotiate, and understand that the landscape has changed.